Good morning, traders. It's 8 a.m. Chicago time on Monday, the 30th of January, 2017. Thanks for joining me again on another Trader Bite, where we lay out our opinion on context and what the market is likely to do next for the trading day. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overnight news is centered around geopolitics, mostly around this immigration ban, the executive order by Trump. A lot of countries weighing in, protests across the country, and so on. Not much to do with the markets. There wasn't much going on with regards to trade this weekend. There's still discussion of a 20% levy on imported products, and what the impacts of that are likely to be. The market is weak this morning. Money has moved into the Japanese yen overnight, up 48 basis points. Gold, followed by gold, 35%, 35 basis points. US dollar, euro bond, and the 10-year treasury, the bond is about flat. Money has come out of the euro stocks, the DAX, the Russell, and the euro on a worst case basis in the futures that I monitor. On as far as other news, we got the PCE core as well as personal income and PCE deflator numbers this morning at 7:30. It is the beginning of the week, so I'll quickly review what we're expecting this week. As far as what's coming up today, on the open, we're looking for pending home sales month on month of plus 1.3% for December at 10 o'clock. That's a half hour after the open, 10 Eastern. Also pending home sales year on year. There's no consensus on that. The prior is 1.4. And then we get Dallas Fed manufacturing activity at 10:30 for January, 15.5 expected, and no speakers today on the calendar. But as far as the rest of the week, it's a fairly busy week with the FOMC meeting tomorrow and Wednesday. Also, tomorrow morning for Germany, we get unemployment change at 3:55 a.m. Eastern, UK M4 money supply, European CPI at 5 a.m. Eastern, and then at 9 a.m. Eastern, we get Case-Shiller housing numbers, and then Chicago PMI at 9:45, which is released early, of course, for subscribers. That's tomorrow, 9:45 Eastern, and expecting 55, and then consumer confidence at 10 tomorrow. And then Wednesday, we're looking for China's non-manufacturing and manufacturing PMIs. Those get released at about 8 p.m. Tuesday night, 8 p.m. Tuesday night Eastern U.S. time. And then during the day, we get ADP construction spending, ISM manufacturing. We also get the rate decision on Wednesday. Wednesday is jam-packed with releases. Wednesday is the peak day of the week as far as the numbers. This is one of those weeks where we get both the FOMC, which is a high tier number, as well as unemployment. So this week is likely to be fairly volatile. It'll be the first week of the month starting Wednesday. The BOE reports on Thursday on bank rates, construction PMI out of the UK, and then on Friday we get the Caixin China manufacturing PMI. That's Thursday night at 8:45 p.m. our time. UK services PMI at 4:30 a.m. on Friday Eastern, and then we get non-farm payrolls at 8:30 on Friday with unemployment, factory orders at 10, ISM non-manufacturing at 10 as well, and then Fed Speaker Evans at 9:15. So you can see, based on the slew of releases there, that it's likely to be a fairly volatile week. The S&P minis are trading 2281. Again, the market is moving. The market sentiment is to safety this morning. and that's how things are shaping up. Let's take a look at what we expected on Friday versus what we got. The primary hypothesis on Friday, given where we were, we have 2 days of balance. We have a gap up, 2 days of balance, Wednesday and Thursday. We come into Friday, and the expectation is the market will likely open sideways and then dip lower, and then expected a rally later in the day. So the primary move on Hypo 1 was lower with a rally later in the day. The market actually did that, except we didn't get the rally. So here's the push up early and then drop, and then it just did not have anything in it as far as rallying up, and it just continued to stay on the low side, and of course with the high kurtosis and the long liquidation B-shaped profile. Imagine this profile on this side would look like this. This is what we call a B-shaped profile. It's a long liquidation profile where the market liquidates early and then sits in balance. The pattern, the usual pattern, is that it's likely to continue lower if it does not find a bid later in the day, and that's what we got overnight. So it's fairly consistent. That was the primary hypothesis. The primary hypothesis basically failed back here to find a bid and continue to hold lows throughout the session. The secondary hypothesis was for a push up early that gets sold. So a push up early after balancing in the morning, a push up higher, failure to maintain higher prices, failing against the 2300, and then it sells off, and that starts us off on the rotation down. We still have this gap below us right here, that is a magnet, and that's how things have shaped up. So what we got is Hypo 1 without the rally at the end of the day, so it did not quite work out the way we had expected. Notice that this is again a 2-tick Renko, which is what I trigger off of, and without too much effort, I can fit the entire day on about a third of the screen. This tells me that there wasn't much activity on Friday. This is one massive zipper here, and it just didn't go anywhere at all. So with this, we're looking for an extension. We looked for an extension down overnight into the gap zone, and what we actually got was a gap down. Here we go. What we got is a gap down. The market opened at this dotted line. The dotted lines are the first print of the session. The market gapped down on the dotted line and was unable to make any pushes back into the range. The expectation is it's likely to be responsive and start to make a push towards the prior day's range, and it did do that, but could only get to 85.75, and it has now fallen through the mid and is selling off a little bit. So as we talked about on Friday, the expectation is the market is likely to start auctioning lower, to start enticing buyers to step in. The market's exhausted over the last few days. So if we extend this profile forward, we'll see that we ended up with a two-pronged profile, two-pronged profile, a two-pronged profile one second. Sorry, a two-pronged profile here with the point of control 2289 is shown on the flex levels, and what we have is a fair amount of resistance now above. The market has consolidated, accepted the lower value, a lower high volume node and point of control, and has shifted down. So it has pushed through into the rally day from last Tuesday on the low and is holding steady here into that almost into that prior composite. So if we extend this composite out right here, we see that we've essentially we're essentially tapping right on the top of that composite at 22.8075. Okay, so what am I expecting here? Actually, I wanted to go over the week for you real quick. What have we done for the week? Last week had 44.75 points of range, which has been unusual lately. We haven't had that since back here. And essentially what the market has done is it has consolidated, as I pointed out over the last couple weeks, and it broke higher into new highs as expected, left a gap after Tuesday. So Monday's gold, Tuesday's purple here, or whatever that color is, Wednesday's red, and so on. Thursday's green, and Friday's blue. And you can see that the market has pushed through and is filling in below, leaving us with this low volume zone, which is likely to be the attraction over the next couple of days until the FOMC comes in. So the market has consolidated and has broken up on the upside and is now retracing some of that, which is very, very natural. As far as what I'm expecting for today, I'm expecting this market to open up down here. This is the current print. I'm looking for an open auction out of range. I'm looking for a, an open auction out of range. I'm looking for a push into the prior range. So I'm looking for the overnight high to fail, for an attempt to make it through. I'm looking for resistance on an initial attempt, and then I'm looking for it to try to come back and push into the prior day's range. Right now, prices may seem advantageous to those who are still bullish, as the market is pulled back into the zone, into the gap zone here. And so that's the primary hypothesis. The secondary hypothesis, if we do get a push down on the first go, I'm looking for a test of 77 and a quarter and a little bit through, and then I'm looking for it to hold and fill in this gap zone, but not quite get to the range on the upside. That's hypo 2. Wow, I cannot draw with my mouse today. That's hypo 2, so look for the rotation down and then finding a base into Tuesday's range, Tuesday's profile, and then looking higher. I would not be looking long below 2273 today. It's likely to find more and more sellers flushing out. Below there, there's not much in the way of volume down there. If you look at what happened on Tuesday, you could see that there's a low volume node running all the way down from about 2273 to about 2268. That area is probably not a great area to fight this and push to the long side. One last thing. Tomorrow, I'm doing an AMA with Futures IO. I was invited to do a half-hour AMA. I used to do those about once every couple months or so. I did put out the link for it on Twitter. I'll add it to the description of the video. I invite you to join and ask a question. If you're not part of Stage 5 and go through the AMAs every Thursday, then this is a chance to have a conversation and ask questions. It's supposed to be a half hour long. Generally, they're around about 45 minutes or so it's not going to take up too much of your time. If there's something I'm doing here that you're not understanding, and you want to get on and ask, that'll be the venue. The next Tuesday, I believe it's February 7th or so, I'm doing a webinar for Futures IO that's going to discuss uh, information versus price risk. The fact that we have to balance those, and that people um, tend to move towards price risk over information risk. They tend to look for confirmation, more and more information, and risk worse and worse prices. We'll discuss that a little bit. So 2 webinars coming up, and then of course I released a video last Wednesday, of the order flow and depth flow analysis and execution. To get that video, just add your name to the mailing list, and the system will send out the link for the video for you. It's a private link. Good luck, and I'll catch you tomorrow morning. Take care.